Morning everybody, it's Chris here from Serene Education with the 4 majors notice update for the 1st of August 2012. Hi guys, hope you had a fantastic evening, day yesterday. Any of you guys who joined us on the webinar last night, it was good to see so many new faces, and it was good to see that you guys could actually make the attempt to see if this is what you would like to do long term. And I gave you a nice detailed insight into the CTC strategy, and I'm going to do the same thing. It's pretty much what I do every single day. I'll do my analysis on the 4 majors. Look at the long-term time frames, the weekly, daily, 4-hour and hourly, to get an idea of any market setups or direction. Okay, so without further ado, just going to crack on with the euro against US dollar to start with. Let's have a look at the daily. Okay, still ranging, pretty much still coming unstuck under that, between that dead 20, so the 1235 and 12400 mark. Notice to be 1235. Is a clear area of resistance above us, so you've got to mark that out in your charts. Always mark your major support and resistance levels out, because that will dictate what you're likely to see intraday. Okay, so if you're an intraday trader, always be aware what's happening on the weekly and daily, because that will decipher if you're going to see any further price movement for that particular time frame. In this case, if I was looking for a trade on the daily and I was looking to go long for whatever reason, clearly not, because I've got this major resistance above it at 12,3500. So at the moment now, the CTC is still telling me that we should be looking for selling sentiment. You can see the overall trend is negative. I've drawn my trend line on here, and you can see that we are still below the major moving average, which is the institution, but the 50 as well. And we have this major resistance here in terms of the 12,3500 price support and resistance. So I've got 2 forms of resistance plus the moving averages, and my CTC, the count the cash system, is telling me that we should be looking for further selling sentiment. Yes, we have a blue arrow, however that's null and void, because you need to see a blue candle and the CTC on the other side has to go blue. I only have one arrow here which is telling me heads up Chris, we're seeing consolidation, which is correct, because we are seeing a pullback in this downside trend, and this pullback is occurring at the underside of a major support and resistance in the shape of the 12,3500 mark. So what we do need is, if this is to remain bullish, or if this attempt of yours to remain bullish, we do need to see this 12,3500 being breached and a nice bullish engulfing candle being formed. Only then will I take the necessary steps to look for potential upside movement. Until then, I'm telling myself I should still be looking for negative sentiment, because my CTC histogram on the other side is telling me that I should be looking for that. Okay, so the only thing I need now is a nice bearish engulfing candle here at the underside of 12,3500. And a candle to confirm that. So now I can move down to my intraday time frames, i.e. my entry at 1 hour and 4 hour, to see if there's a confirmation of that. So if I go to my 4 hour, let's have a look and see here. 12,3500, that major support and resistance on my daily, weekly. There we go. And what does it coincide with? That institution moving average. Okay, you can quite clearly see here hesitation at this level and the institution moving average coming down. I do have blue. Histogram blue, blue, blue. Everything's looking blue on the 4 hour. The last 24 hours or so. When do we go to? 16. Yeah, we have blue. However, this is not giving me a genuine buying signal, because I'm still below that major support and resistance level at 1235. And the institution's also there to confirm. So now I have the downtrend, the institution moving average, plus the support and resistance at 1235, which is telling me clearly there is no trade upside. Even though I'm getting a lot of buying sentiment over here, it is happening below a major resistance. Got to get above it. If that buying sentiment carries through now, if the big boys out there with the cash punch through that 12,3500 and close high on nice bullish engulfing, heads up, then you got my attention. Until then, it's not a clear buying signal, so I'll stand aside until such time as I get that. Patience is key, guys. Very, very important in trading. And this is one of those times when we have to be important. There's a lot of news coming up the remainder of this week. We have ADP non-farm unemployment figures. We have the non-farm US unemployment figures this Friday. So big one to watch. A lot of speculation. And when you have a lot of speculation, you have a lot of volatility, which leads to a lot of erraticness. Okay, we don't want to be trading that erraticness. We want to be waiting for that erraticness or that sentiment to be genuine sentiment. We want to see the big boys telling us, yes, this is what's happening. So if you're not trading at the moment now, this is probably a great time to stand aside and to make notes. Okay, see how news actually moves the market, how it reflects on markets price and the volatility. Gauge that as you go on, and the more and more you become accustomed to these movements, I can assure you it'll just add another arrow to your or another egg to your basket. Okay, as traders, we want to have as much confirmation on our side, and if you can read these setups, candlesticks in particular will give you that, then you're only going to be adding more to your ability to read trades. And if you can read a trade or charts a lot better, then you're guaranteed to be a lot more successful going forward. Okay, so patience is key now. Onto cable. Let's have a look at cable on the daily. Clearly, just looking at this straight away, you can see there's a hesitation over at the 15,700 mark, and that coincides nicely with that institution moving average. And you can see very, very clearly over a period of a couple of months, price has been headbutting this area here at 1575 and pulling away. Here through bits of June, first parts of July, end of part of July, and going into the just before the start of August, you can see clearly price has been rallying into these areas here, but falling back. Okay, the CTC on our daily has gone blue over the past couple of days. However, that sentiment has gone blue at the underside of a major support and resistance. Great, get above it, heads up, look for entry, look at our stop management, look at our targets, etc., and pull the trigger. However, resistance is clearly in the way at the moment now, so I shall not be taking a trade until such time as price has closed, in uppercase, above 1575, because then my daily and everything will be in my order, i.e. blue arrow, blue candle, higher close, above major support and resistance, everything in my order, then I'll pull the trigger. However, I'm getting blue, 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 blue. All the moving averages are moving sideways. The institution moving average is above price at the moment. Clear resistance, no trade. Okay, you can see every time we moved into this area, we've pulled back, pulled back, pulled back, pulled back. So look, intraday for a potential pullback. Okay, so look at your 4-hour chart, for example, 1575. Put that 1575 in. Got to put these major support and resistance levels in, and then look, gauge and see where price is trading in conjunction with that. See, you can quite clearly see here into this dojis, spinning tops, and then we had this bearish start to it. A lot of indecision here. You can see all the institution moving average below price. However, you can see the CTC has gone red on this time frame, and as long as it's trading below that, then we should potentially looking for breakouts to the downside. You can quite clearly see it's now testing a intraday support on the 4-hour. A lot of hesitation here at the 1567 mark. So if price can stay below this 1567, then ultimately we could see price pulling or moving to the downside back towards our institution moving average here at 15600. We have a red arrow, red. Everything's red across the board. The only thing we could look at is potential target here at the 15600 mark. Okay, so as it stands now, you can quite clearly see price moving in this consolidation range, squeezing between this major support and resistance level here at 1575, and you can see price is moving higher, swing higher, swing higher. So we could see 1567 or 1560 as our first target, and then back down to 15500 or 55. However, as long as it's trading below the 1575, we should be looking for consolidation with a likelihood of potential downside to occur, because each time we've moved into this area here, we've seen price pulling back. Onto the Swiss franc. This particular pair has been rallying over the past couple of months, and in doing so, just rallied straight into a major support and resistance level on our weekly, which happens to be the 100 mark. Okay, which brings up the institution moving average. Clearly here, you can see price has been trading below the institution moving average for months, and clear enough, we can see price has rallied into it over the past couple of months, setting us up nice swing high since August, September of last year. Now we've seen a bearish engulfing candle. See this candle over here, this last week's candle, even though it moved into these highs over here at the 100 mark, it is now pulled back, and that pullback on a weekly is now clearly formed an engulfing candle, which has engulfed the prior week, well, the prior 2 weeks, and we've seen price pulling back. How far the pullback depends to be seen. You can see we had a price support and resistance level here, roughly around the 96.50, 97, and you can see prices making its way back now on the weekly. A lot of sentiment on the lower end of this candle, the weekly candle, as we head into Wednesday. Excuse me. So let's have a look at the daily. There we go. You can quite clearly see the CTC strategy is all blue. That's because we've seen positive sentiments to the upside over a number of months. And you can see it's staying above the institution moving average, which is a clear indication of positive sentiment. There we go. Since May, a lot of buying, pull back, and further buying, and we head into the 1000, which happens to be their parity mark. And since we got there, We started seeing people selling their contracts because they've got to reach their target. Okay, and those contracts have gone back out on the market again, and people have swallowed them up to sell them because they know they're selling into a major resistance. That's how it is, guys. That's how we get ebbs and flows on the market. Trends are caused by that, because for every buyer in the market, there's going to be a seller. There's always going to be a buying opportunity, there's going to be a selling opportunity. And that's what we're seeing. We're just seeing a change of the guard from a positive sentiment outlook to a negative one over here. So you can see a lot of buying into here and then selling. Now, how far that selling takes back, it will remain to be seen, but we can see a major consolidation here, roughly around the 9700 mark, major support and resistance level at this time frame. So that will be our target for price as we have the pullback, and you can clearly see we've attempted it in the past couple of days, and you can see the sentiment this morning, especially on the Asian session, we are seeing a return to that. We have a red arrow, however everything's still looking blue, and as long as we're still staying above this major support and resistance level here at 97, we should still look for price to still be positive. It's just consolidating in an upside trend. Okay, so we could see a potential bounce here, swing high, swing high, swing high. We could see consolidation in this area. So if you're looking for a trade, guys, intraday, heads up, we're going into a consolidation range here. You don't want to be trading against the major support and resistance level. Okay, so US dollar Swiss franc, no trade until we actually get a break and close lower than 970, which would dictate that we should be seeing further downside movements. If that is the case, then we could be targeting areas like here at 94.5, major support and resistance there, support. So there'll be a nice consolidation area, which will bring us back towards the institution on our daily. Okay, but it's clearly got to close lower than 970. Otherwise, we could see a bounce. Okay, so what we want to do is look at our intraday charts to see how price is doing on an intraday. So what's happening now? 970, as I said to you, major support and resistance level. On our daily charts, you can see that the institution moving average complements that. Okay, you can see on a 4-hour hesitation above this area, but you can see the institution moving average at 970. Price has attempted this area and pulled back. Notice the CTC has gone red for the first time in a month. Okay, but this will not be a genuine selling opportunity until such time as prices close below the 970. So anyone looking for a shorting opportunity, we could see that going into 970. However, I wouldn't be holding all my cards, all my trades open until at 970. I would take that target and look for potential bounce, because you can see the upside trend is still favoring upside. We're still trading above the institution moving average, and as long as we're doing that, we're seeing upside positiveness. Swing high, swing high, swing high. Institution below price. Hence the reason why we've seen a lot of blue, confirming that price and sentiment is long. And as long as we're still trading above 970, then we should be looking for bounces, corrective bounces. Yes, we're having pullback, but we could see nonetheless a bounce to the upside. Okay, sentiment's got to be bearish. It's got to be trading right through this in order for it to be negative. At the moment now, we're still trading above, and you can see it's been consolidating above 970. So this becomes a major support. And as long as there's a major support, then we could see support pushing price to the upside again. So if I was looking for a trade on this, I'd be standing aside, looking for a nice bullish engulfing candle in and around here. We could start seeing a lot of iffing. You could see the intermediate trend is negative. See, swing low, swing low, swing low, swing low. So we're being squeezed here, guys. I would not be looking for a trade in and around this area over here. They can have this. A lot of the speculators can have all this, because what you do is you end up having price just going sideways with a lot of volatility, and you're not making anything. You're just wasting a lot of time. So make a note of it. If anything, just put a nice little trigger point here above 980 for a close, or a nice little trigger point below 970 for a close. Okay, you're only interested in this price once it breaks above the price swing, in this case above 980, positive upside, bullish engulfing, or bearish engulfing below 970. End of story. Last pair of the day, US dollar, Japanese yen. What's been happening? We know this price came unstuck at 8400, major support and resistance level on our weekly, and in doing so returned to the downside and testing price support and resistance level at 80 to start with, the breakout 80, and then the 78. 78 was another consolidation, and then the 76. You can see this pair over a number of years has been consolidating between a number of points, which happens to be the 76, and our support and resistance level there for a major number of months. There we go, and then a bounce higher, but then consolidating between the 76 and 80. Then we had the breakout, and then it tackled the 80, and once it broke above 80, you can see support being found and trading higher to the 84, coming unstuck over this area and then pulling back, in some sense trading below the 80. So on our daily, notice the CTC is still telling us we should be looking for negative sentiment below the institution. Moving average, very, very important. And you can see that we are seeing swing lows dictating. Okay, you can see that. If it was down here, you can see that swing over here is still in play. And most importantly, we're trading below the 80 as well as all the moving averages. So price is still looking bottom side favorite. However, as I mentioned on the weekly, we had the 78. And look where price is trading at 78. Price support over here and further support for over a week at this level over here. So as long as it trades sideways at the support, then we could see price bouncing. So it's important that this CTC is telling us we should be looking for selling sentiment. We get a bearish engulfing candle closing lower. Here you can see price traded lower, however closed above 78. Didn't close lower than 78, closed above 78. So important, guys, that you wait for price to close on the particular time frame that you're trading. Don't ever try and second guess the market. You shall get burned. End of story. You will. Guaranteed. Okay, so it's always important that the price moves and then we move with her. Okay, for this to be still negative, we need to see a bearish engulfing because it's telling us the sentiment is still looking lower. You see for the last couple of weeks, or the last week in particular, it's finding support here. A lot of hesitation. Candlesticks tells us that. Spinning tops, bearish engulfings, more spinning tops. When you see a spinning top or dojis, they are indecisive candles. Hence, we do not trade indecision. We wait for a decisive candle. That decisive candle either has to be a bullish engulfing to confirm this is a genuine support now, because you can see we've been bouncing it for a week, or a bearish engulfing, closing lower, confirming that this is no longer support, and we should be looking for further sentiment to the downside. If and when we do get that, then our strategy template on our daily would tell us we should be looking for nothing more than sell opportunities. Then you look for your entry, look at your stop management, etc., and where your target. Ultimate target, if that was to occur, would be 76. Until such times it does that, we're still looking for consolidation at the moment because it's been bouncing. There could be a potential for price to bounce. Okay, you see how I'm giving myself rules of engagement. If you do this, this will be the outcome. If you don't do this, that will not be the outcome. Okay, I'm not doing it emotionally. This is all very mechanical. You have to treat your trading very mechanical, otherwise you will get burns. Okay, leave the psychological, emotional side of your trading at home. Leave it behind. You can see here for a full week now on my 4-hour chart, price has been bouncing. Okay, notice the CTC on the other side, red. So I'm still looking for negative sentiment. I'm seeing lower swings depicting downside movement. Okay, lower swings depicts downtrend. Downtrend depicts negativity. Negativity leads to opportunities for selling. Okay, however, at 78, major support and resistance level on my weekly and daily, I know, and price is now into this, and it's found a full week of support. The longer it continues like that, the more likely is we're going to see a bounce higher. Okay, it's the same thing. If you test the ground all the time and you're failing to break through it, you think, oh great, this is a very strong support. And if you have a strong support, you can build on that. If you have a really weak one, then you can't build on it. So if this is to remain a strong support, then you're going to see price building on it. It's imperative, if this is still to be negative sentiment, that this support gets broken as soon as possible. The longer it takes to break it, the more likely we're going to see price changing from more of a bearish stance to one of a positive stance. Okay, changing of the guard. That's what we're looking for. Okay, and this is the reason why the CTC is so good, because it gives us rules. Yes, everything's looking negative at the moment. However, the last rule has not been engaged, and that is a break and close lower than 78. End of story. Everything else is telling us we should be looking for negative sentiment. The other opportunity is a bullish engulfing here, a break above this consolidative range. Okay, once we get that break above that consolidative range, then we can start looking for potential buying opportunities. See, there's a consolidative range here between 78 and 78.40. A lot of consolidation. Yes, there's been a breakout, but there seems to be more consolidation in this range over here. Okay, so my hourly, for example, I want to see that. I want to see that break of that consolidated range. If this is a genuine support here, we know that 70. Here's my hourly. Here's my support, my major support here at 78. Got to put these lines in, guys. Look what the institution has been guiding this price, forming a resistance level for this price. And you can see now we've been squeezed between the institution moving average is pushing price lower, and the major support, which is pushing price sideways. My RSI is telling me that sentiment is still negative. Look at that. We're spending more time below 50. And as long as price is trading below 50, it's telling you that sentiment is still negative. Okay, so we're in a negative range, consolidative range, and a negative trend long term. So if this is to be bullish, I'd need to see price trading well above 78, 50, 60 in particular. Get above that institution moving average. Get it well above it. And if it does that, then I should be looking for nothing more than buying sentiment. If that's the case, then I should be looking or targeting potentially 79.20, but overall back towards the 80 way above me, because that's my prior major support and resistance level on my daily and weekly. See how I'm giving things. Otherwise, get a squeeze here, break below 78, then we're seeing a continuation to the downside because the overall trend on my weekly and daily is still negative. Okay, so see how I'm putting together, I'm building up pictures on these charts. That's it, guys. 20 minutes is up. Please be aware there's a lot of news coming out for random. This is the first week. This is the 1st of August, so this Friday will be the first week of a new month. Guaranteed non-farm payroll figures out of the US. Very, very important. Thursday is also a lot of news coming out. We have, if I'm not mistaken, we have also sterling and European interest rates announcements tomorrow. Okay, which coincides with the unemployment change non-farm for Thursday and Friday for the US session. So there's a hell of a lot of news. Lots of news out there, guys. If you are not in any trades, expect volatility. Okay, we want to see volatility because it pushes price a lot quicker. But we don't want to be trading into volatility. We want to see the outcome of that volatility, i.e. breakouts, etc., etc., etc. Okay, so patience is key. Rather let the market make its move. We know some of the markets out there are very, very negative at the moment now. All we want to see, and a lot of mine consolidation patterns at the moment, we want to see a break of that consolidation in the direction of the overall trend. Okay, get those breakouts, look for your entries, make sure your money management, which is key in trading, is spot on, which allows you to take the trade. Look at your targets, are they in line with everything, and then just pull the trigger. Take away the emotional tie of trading, and you shall become successful, guaranteed. That's it for me today. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.